It's been a really volatile few months for Bitcoin.
Just look at a chart of Bitcoin's price in the last 12 months.
And therefore, the structure, which had been carefully constructed since all of eternity forward, the structure is now rendered null and void, and it collapses.
With the volatility that we're seeing here and there, we see that throughout the year, but we also see continued growth, and we finish the year high.
I guess the thermodynamic inertia of the thing increases and it becomes more immutable.
Yeah.
When there were 100 holders, it was something. When there was 1 million, it was more immutable. When there's 100 million, there's more immutable. When the Bitcoin mining spreads further, when the holders spread further, when there are more institutions and organizations and jurisdictions holding, the more it spreads, the more immutable it gets.
Right.
And therefore, the higher degree of confidence you can have in the integrity. That is what's interesting about this entire phenomena. I mean, I've kind of described it as a fire in cyberspace, but a better metaphor might very well be a monetary virus in cyberspace, right? Yeah. It's a living creature, right? And we can go back and forth over what kind of living creature.
Yes.
But it's a living creature that's massively decentralized, massively fault tolerant, that's got a genetic code, and it's a swarm creature, right? It's genetically reproducing its DNA, and the more it reproduces, the more it spreads. The more decentralized it gets, the more immutable. So the fiat standard is appealing because of the portability of the purchasing power. I mean, the fundamental problem is we start with inflation again. The government can create more of it. But here, the inflation problem is not a minor problem like gold. It's a major problem, right? Instead of getting a guaranteed 2% inflation with an occasional 20%, you get a guaranteed, I think Saifedean suggested the number was more like 10 or 11% guaranteed, 7% guaranteed in the US, more in other countries. So you're getting a guaranteed inflation of somewhere between 7 and 11% a year. And you're getting an occasional inflation of 30% or 40% a year. Doesn't work so well, right? It's not conservative, right? And so if you have a shared ledger that's not conservative, right? It's collapsing, and there's just nothing. I said to people, there's no engineered machine or structure that works with that degree of error or inflation. If you had a 2% leak in your gas tank. So the inflation, ironically, right? Inflation implies you're getting more, but really it's dilution in a way. It's guaranteed dilution or depletion. So the first problem with fiat is it's just depleting energy at too rapid a rate. If we just said 10% a year on average, then a system which is losing 10% of its energy every single year, or almost 1% a month, kind of a crippling first order problem on the base layer. If I'm building on sand and the sand was sinking 10 feet a year, right? What structure can you build, right? When you're building on something, you want to build on granite and you want the minimum deflection. Granite doesn't deflect, steel doesn't deflect. Sand and clay deflects, swampland deflects. So the problem that we start with is the base layer is collapsing. The second problem of the fiat standard is confiscation, as the government can seize your currency, or they can seize the asset. If you carry your cash around, right, there's the famous image of Pablo Escobar, sitting and burning $100 bills to stay warm. If you can carry it around, someone with a gun can seize it, so that's a problem. If you don't carry it around, then the counterparty that you trusted it with, generally the bank, can seize it. And in all cases, generally the government can seize it. And so these are three fundamental defects with the fiat standard. So in both cases with gold and fiat, the base layer protocol is defective and the application protocol is either non-existent or defective. And what makes Bitcoin special and what makes it digital money is Bitcoin gives you a base layer protocol to take final settlement, and it gives you an application level protocol too. Either we could debate back and forth, right? Is the application protocol on the base chain, the blockchain? If so, it's a Bitcoin transfer, or is the application protocol on the Lightning, using a layer 2?
Yeah.
Well, either of those, could be viewed as an application protocol.
You're still maintaining the option for final settlement, even on Lightning, right? So I think the core, and this is so critical for if people can understand this, that the anti-fragility of the world economy even is dependent on this simple fact.
If you're considering a crypto asset network like Bitcoin, and Bitcoin is the greatest, maybe the only successful example, but certainly the greatest example of a crypto asset network, the frequency parameter and the block size parameter for a crypto asset network is the equivalent to the space-time constants in our in a universe. So the frequency, the 10-minute frequency, that's how fast the universe evolves. And the block size is the gravitational constant. How much mass, or what is the relationship between mass and energy, and how tightly packed is matter? And once you've established those two constants, you've defined the constants that run the universe.
Right.
Everything else evolves around those two constants. If this is why you would never want to change them, because changing them is playing God, and you only get to play God once. Like when you start the universe, if you change the frequency and the block size of Bitcoin, you invalidate all work that's come before. You imperil all structures that have formed in the universe since the beginning of time. You impair every mechanism that's been created within that set of structures. You impair them and maybe break them. And you throw the future into chaos, right? Stuff breaks, not just factories start breaking, buildings start collapsing, bridges collapse, tires deflate, right? And the person that worked for 100 years to create that great company, or the Rockefeller Center, and it just crumbles.
Yeah.
Okay, so so you worked for 100 years and you did something and it was beautiful until everybody's dead.
Yeah.
What happened? Well, you changed the gravitational constant, you changed the space-time constant, and therefore the structure, which had been carefully constructed since all of eternity forward, the structure is now rendered null and void, and it collapses. Like the entire Bitcoin mining industry. It's all predicated upon Bitcoin coming out at a certain speed and the protocol tapering off, and the value of all transaction fees are predicated upon the block size. Right. If you increase the block size, the transaction revenues collapse. If the transaction revenues collapse, the Bitcoin mining profitability collapses. If the Bitcoin mining collapses, the energy usage collapses, the security collapses, the network collapses.
Right.
What's going on with some of the proof of stakers is if you flip from proof of work to proof of stake, you destroy your entire mining industry.
Right.
If you destroy your entire mining industry, all of the security, all the social, political, economic, thermodynamic security collapses.
Yep.
If it collapses, the integrity and the durability of the money collapses. There are all sorts of second order, third order, fourth order consequences